Welcome back. Now let's discuss today's burning economic issues at the domestic commodities markets with a research analyst at the financial derivatives company, Temitope Olugbele. Good morning, Temitope. Thanks for coming on. Well, let's begin with oil prices now. They're trading around $40 per barrel. Of course, the market has been very, very volatile lately. But what are the factors that are driving the markets at the moment?
Okay, so like you mentioned, yesterday the market was extremely volatile, trading above 40, below 40 intraday. And, we saw that, we're about $40 per barrel now. I think what's going on with the oil market now is just a flood of bearish sentiment, right? From the rising coronavirus cases in, India, the UK, the US, to, EIA coming out to further reduce its oil demand growth forecast for 2020 by over 200,000 barrels. So these bearish sentiments, we see that, these bearish sentiments are really pushing down prices, and that's what's happening with oil. And, what we're expecting now going forward is there's going to be like a market monitoring panel meeting next week of the OPEC Plus team. So they're going to meet next week, and we expect, for them to really take time to give us a strong direction as to, both demand and supply, especially supply, outlook going forward. So that's what we're expecting next week.
And where are we likely to see the prices?
Before then, I think it will still remain volatile. I think because, except we have a new bullish sentiment that raises up prices, which I don't see coming right now. So the market will still be reacting to the bearish sentiments flooding the markets. And I think it will still be $39, $40 per barrel for the week before the meeting. Then from the meeting, it will depend on the outcome of the meeting.
The markets will take a cue from that.
Exactly.
All right, now let's talk about the headline inflation forecast for August, which you guys at the FDC predicts to increase to 12.95%. We shed more light on the factors that will be responsible for the increase.
Okay, so, we are projecting a 30-month high of 12.95% for the month of August, for the reports coming out next week. And we see that, one interesting trend that caught our attention was the money supply aspect of it, right? So we saw that using e-payments as somewhat of a proxy for money supply, we saw that there was an increase in e-payments by about 1.86% for the period. And we see that why e-payments is really catching on right now is before it had the convenience factor. It always had the convenience factor. So your e-payments include channels like your POS, right? It always had the convenience factor. But now you see that it also has the social distancing, kind of protocol factor driving that increase usage. So we see that if we take that at a time where output is contracting, we see that prices are going to, increase. That's the economic theory of it. And that's why we're projecting headline inflation to increase to 12.95%. And, we see that month on month, we're projecting a decline, actually, the first decline in, I think, 6 months, yes. And we see that we are, why that is so is because between July to August, we saw that there was the commencement of the harvest season. So that is expected to, push down month-on-month inflation. But going forward, it's, these policy pronouncements we got in September that is really on the, and we're already seeing that from our market survey, we're already seeing some prices increasing based on these policy pronouncements of the increase in PMS price, the increase in electricity hike. That will start to kick in and manifest from September's inflation data.
What's your latest assessment of the stock market in recent times?
Okay, so far, today is Thursday. So far this week, for the first 3 trading days, we see that the market has been negative. The sentiments have been negative. And we think that, it's first the negative investor sentiment. And it might also be profit taking from the last week's rally. We saw that there was a, literally throughout the last week, there was a rally in the stock market. So there might be that. Investors might be taking profit from that rally. And, also, investors are still a bit wary about some corporates that are yet to release their result, still wary about the policy direction, still wary about the stimulus, if it's enough to, lift corporates out of the slowdown that they saw in, during the lockdown restrictions. So we see that that's really what's happening with the stock market now.
All right, on Tuesday, the PPPRA announced the full deregulation of the petroleum downstream, and that means that marketers will now have the liberty of fixing the pump price of petrol. So what are the implications that you see at the FDC?
Okay, so, you know, when this partial deregulation started in March, we saw that there were price bands, you know, upper and lower limits, and, you know, marketers were forced to, you know, stay within that limit. So now that, you know, they're really ripping off the bandage and saying, okay, fine, we want to go full out on this deregulation strategy, and, you know, marketers are free to price as they will, you will see that marketers will now take in consideration, the major consideration now will be the cost of importing this PMS, and that would, you know, take into factors like the exchange rate, you know, that would start to play in the pricing, you know, strategy of these marketers. But we might start to see a pricing differentiation across different retailers, but I don't expect it to be so wide, because the thing about this market is the information is free. There's an information symmetry, right? If I hear word of another, you know, retailer selling at a cheaper price, I wouldn't come to your retail, you know, petrol station to buy my PMS. I'd rather go to where it's cheaper, provided the place that is cheaper is close to my vicinity. So I don't expect the pricing differentiation to be so wide, because if there's information symmetry in the market. So marketers, and again, the PPPRA they've also said that they would serve as a regulation body, which they were built to be, you know, to make sure that these marketers don't, you know, don't go off on, you know, over profiting and taking exploiting consumers at a time of volatile income. So we don't expect the differentiation to be so wide.
But are we likely to see prices drop?
I mean, it would depend on what's happening with the global markets, right? So, you know, given that so far this September, we've been seeing prices volatile, you know, we're some days, intraday, we're seeing it below $40 per barrel. That might take effect for the next PMS price review, given what the Brent prices average in September. We might, depending on what is happening in the global Brent price market. Yes.
Now, talking about Forex, now we've seen the Naira stable at the parallel markets at 445 Naira to the dollar lately. Yeah,
I mean, we've seen that there's been that stability in the parallel market. We haven't seen much, you know, movement in terms of, you know, the parallel markets. And as long as, you know, the supply keeps, you know, flooding the markets as best as it can to match demand, we see that prices right now, Naira remains stable. We hope that stability trend continues going forward. Yes.
We're all watching now. Then what would be your reaction to the suspension of the launch of the eco currency by ECOWAS? They say they want to take a gradual approach.
Yeah, I mean, the reaction basically is a step in the right direction, kind of, if you look at it, because given what these ECOWAS member countries are facing in terms of their domestic currencies, you know, the COVID pandemic has, you know, sent currency weakness. There's that currency weakness across different countries. It's not peculiar to Nigeria alone. So it's a good time to just, you know, take a step back, let the economic recovery path, let's start knowing what the economic, because really as we come into the post-COVID world, we'll see that economic recovery will be different across different countries, depending on your fiscal and monetary stimulus to get your economy out of the downturn. So that economic recovery path is different for countries. So when you start to see what the different member countries are, the path they are taking, then you can now kick in the ECO launch again. But for now, it's appropriate for the times that we are in to suspend that. Yes.
All right. Now, what about the external reserves? They're still climbing. Of course, they now stand at about $35.77 billion.
Yes.
So what's still fueling this increase? How much of good news is that for us?
I mean, for the state that we are in, for the state that the delicate balance our Naira is, I mean, we can take that to be good news, but how long it's going to last remains a question that, you know, is still up in the air. And we see that, I mean, it has maintained that trend for, I think, over a week now, and going forward, it is expected that the trend might start to change direction. I'll be honest. It might start to change direction.
To the volatility at the crude oil markets?
Exactly. As you see that volatility continue to play out, you know, the average price of Brent right now for September is definitely lower than what it was in August. And if this volatile trend continues, it might come in lower at the end of September than what it was in August, and that would reflect in your external reserves balance.
Now, we'll continue to talk about power, Temitope. Of course, you know, power is key. So we'll always want to know if there's any new development that is worth talking about.
Right now, I don't think so, because what we saw from the latest reports was that it's above 4,000 megawatts per hour. There's really nothing new, you know. There's we're just, waiting. We're just waiting to see that impact of the electricity hike, in terms of electricity rationing, in terms of, consumers starting to ration how they use their electricity, since you're paying, is now cost reflective, right? You will start to see that rationing. But other than that, there's really no new development in the power sector.
So where are we in terms of commodity prices now, and what's your outlook for prices in the coming days?
Okay, so, we went on a survey this week, and we saw that, some prices are actually, flat. There was that flattening of prices. So take rice, for example, though we see that floods are washing away harvest, some of the harvest up north, we've not seen that yet to take in, yet to reflect in prices. For now, there's no how it would definitely start to reflect in prices. We also see, other commodities like beans, still, flat, and the commodities are relatively flat right now due to the, there's also the harvest season impact, the flood of commodities. We see, take yam, for example, so where we're supposed to be seeing a decline in yam prices because New Yam Festival, there's that flood of new yam, but we are not seeing that because according to the marketers, the influx of harvest this year was not as much as what you would get, after the New Yam Festival. I mean, it could be a number of factors. It could be because when the planting season was happening, there may be lockdown restrictions. Farmers couldn't plant as much as they could have in other years. So those factors are starting. We see that New Yam is not as low as it could have been and what it has been in other years. So that's really what we're saying. But going forward, we expect, the prices to really start to trend downwards as harvest season continues to play out in price movements. Research analyst at the FDC, Temitope Olugbile, thanks for coming on the program. We'll be back in just a moment. Please stay with us.